Alright guys, welcome back to class. Previous section we were able to calculate our net present value and the terminal value. We look at how the worth of our business in the unforeseen future, and we look at the present value, the net present value of the business, which is now the explicit period. Which is the net present value of the explicit period, which is the period we're talking about here. So in this section we are going to now look into the enterprise value. The enterprise value is actually very simple. Now the enterprise value is just trying to say, okay, what is the present value of the business and what is the future value of the business? When you add them together, we have what is called the enterprise value. Okay, so when you do this, just highlight this like this and format it. This is going to be our subtotal style, right? So the present value of the explicit period, which is now the current period. So the present value of this business is this. You can either choose any of this, right? It's going to give you this. Now what is the enterprise value? So the terminal value. So the terminal value is going to be equals to the terminal value we just calculated, link it. So when you sum the total, the two of them is going to give you the enterprise value of this business. So if I come back here and remember our divisor, so expand this. So this is the value or the enterprise value. Now we are going to add things like the cash, which is going to give us the enterprise value. So we're going to now see the equity value of our business, or the business, right? We have seen the enterprise value. Like I said, the enterprise value is just the summation of the net present value of the explicit periods and the terminal value we just calculated. So in order for you to buttress our understanding on what the enterprise value is, let's see. So enterprise value by definition is the total value of a company, right, including both its debt and the equity. So it represents the actual cost of buying the entire business, not just its shares. So unlike market capitalization, which only considers the value of companies' shares, enterprise value includes debt, because a buyer will have to take on the company's debt as well, right? So you cannot say you're just buying the company shares. You have to take on the debt the company is owing, right? So what it does to a business is measures the company's true value, that it shows how much a business is worth, including both its investors' money, which is the equity, and the borrowed money, which is the debt, right? So it helps in mergers and acquisition. Again, when a company is being bought, the buyer look at the enterprise value to know the total cost of acquiring that business. So what it means that you're acquiring both the debt and the shares, right? So that is why we have the cash. I also have to less the net debt from it to have the equity value here. So we are going to see that shortly. So okay, let's just do that immediately. So we are going to now link our cash. Our cash is gotten from our SFP, which is our statement of financial position, right? Our cash. So this is our cash equivalent. You link it. You have to remember, you have to multiply it by the divisor in order to get the same value, right? So this one too, we now less our debt. So now less our debt. So it's going to be this. What is our debt? Our debt. So here it is. Oh, here is this, right? Here it is. Remember, multiply by a divisor. You know why we're multiplying by the divisor? To have the value in a consistent order, right? So the next thing we are going to look at is how to, okay, I was saying something, right? I was saying something before I switched to linking of this segment. So actually we are not done. So your link says style, right? So this is so that you know that it's a link style. So we say that it helps in mergers and acquisition, right? When a company is being bought, the buyers look at both the enterprise value to know the total cost of acquiring that business. So it is used in financial ratio analysis. Investors use enterprise value in calculations like the enterprise value divided by the enterprise value over the earning before interest, tax, and depreciation to compare the companies and find some investment opportunities, right? Enterprise value gives more accurate picture of a business financial health than just looking at the stock price, right? So that is what it means in this regard. So we are going to now see how we have seen how to calculate our enterprise value. Like I said, it's just the summation of the present value of the explicit period, right? That the selected period, right? The current period now, and the terminal value which you have calculated, the future value of that business. That's what we mean by terminal value, the future value of the business, right? So we are now going to see how to calculate these values. We're going to see how to calculate the enterprise value. So remember that this is a negative value. You can choose to put it in negative to know that accounting, to know that okay, this is a value you are removing. So we are now going to say to calculate the equity value, you just sum everything with the enterprise value to get the total equity value. Like I say, like we said, we are looking at the total value of that business. So we are looking at the total value of that business, including a debt and the equity. So this is now the total value of this business. Is now the total value of this business, right? So the total value of this business is 12.516726 million, right? So that's the total value of this business, including its debt. So the enterprise value does not actually include debt, but when you want to incorporate the total value, so when you want to include the total value, you now look at the total value of the business. You have to look at the equity value, which include the debts, which incorporates also the debts, right? So we are done with the valuation of the enterprise. We are done with this. Now what we're going to look at next is the payback period, right? You're going to look at the payback period. So under the enterprise value, what we say is that we said the enterprise value is a better way to measure a company's real worth than just looking at its stock prices, right? Than just looking at its stock prices. So it helps investors, it helps investors and buyers to understand how much they will actually need to pay to acquire the entire business, including its debt and cash. So that is what we have calculated on the equity value and the enterprise value. So let me repeat myself. The enterprise value is just the summation of the present value and the terminal value. You get it? Then to get the actual value of that business, you have to include both its cash and include the debt and less its debt. So that is what we have here. So if you include cash and less the debt, we have this value as the equity value of the entire business. We have calculated our enterprise value. The next thing for us to do is to calculate our payback period. In the next section or in the next video, we're going to now look into how to calculate our payback period. So basically this is just we have now valued our company, and we have seen the worth of this company. We have seen what this company looks like in the future and what the total value of the company is, right? So this is just the end of our video today. This is the end of this this model. So the Prescott global model. The only time we can come back to this is when we are calculating the the payback period. I'll show you how I got these values, how I calculated the payback period. That's the only time we are going to come back to this. If not, the valuation of this company has been concluded. So thank you very much if you have been with us from the beginning of this class to this wonderful moment. And if you have not subscribed yet, more are coming. More modeling skills, more modeling techniques are coming. So the best thing for you to do for us and for yourself is to subscribe to this channel. Follow us bumper to bumper as you are releasing content like this. And if you appreciate or if you like what you're seeing, this is the right time again for you to subscribe, like, and share with your friends. So thank you very much, and see you in the next class.